we will run you through a quick snapshot of the quarter and move on to Q&A session. The second wave of COVID-19 that hit the country in the months of April and May saw a strong proliferation of cases across the country. And while the pace was alarming, thankfully it peaked quickly and hopefully the worst is behind us. While the healthcare systems continue to face the brunt of the second wave, the economic activity did not seem to be as disrupted as it was in the first wave. Operationally, for Apex 2, we continued work at our manufacturing facilities with little to no disruption. However, like we had mentioned on the previous con call too, the most challenging fallout of COVID-19 for our industry, that is an export-oriented industry, has been the turmoil caused in the sea transportation globally, not just India, not just for Apex. With containers in high demand and shortage of vessel space, there have been inordinate delays caused in shipments for our industry, and it also only got bad to worse over the past 6 months. On the other hand, demand has been encouraging, especially with the vaccination drive and gradual opening up of restaurants, the food service sector. The demand that has been flowing from our retail customers continued to remain stable. On the pricing front too, there has been stability with firmness too and on certain products. Now coming to our financial performance in Q1FY22, despite the second wave of COVID-19, the capacity utilization in Q1FY22 improved to almost 58% of our overall capacity of 29,240 metric tons, as production gathered pace on the back of our healthy order book. However, due to the logistics issues, which we have been repeating the primary issue as a primary issue for the past 2 quarters, it translated into a lack of container availability and vessel space. Our shipments or volume sold were restricted to around 78 to 80% of the production. That is dispatches or sales of 3,262 metric tons only. The product mix remained healthy, with ready-to-eat sales forming almost 21% of the overall shrimp sales in the first quarter of the current fiscal. The average realization for the first quarter remained stable sequentially, but improved significantly when compared to year-on-year on the back of improving product mix and better global prices of shrimp. Consequently, despite discontinuation of the MEIS benefit from the Government of India, which formed close to 5% of our FOB value, our total income posted growth on year-on-year basis. However, the gain in the revenue could not be translated into a commensurate increase in profitability on account of higher other expenses and raw material purchases that could not be translated into shipments. Part of the raw material consumed for shipments for the first quarter of the current fiscal was procured and produced during the earlier months when the farm gate prices were higher and could not be shipped in time due to the logistical issues. The other expenses were largely impacted due to higher export expenses, which included freight costs. As we had mentioned on the previous call too, all the service contracts with major shipping lines were signed up at higher costs from the start of the current financial year, and the additional premium rates are being paid to reserve vessel space as we speak in the current day. Our customers too have been put on notice, and they too are supporting us with regard to the increased freight costs over the past few weeks. This, of course, is in both of our primary markets, which is both in USA and European Union. The European Union customers have been more proactive, and they have already issued a revised purchase orders. So anyway, we do hope that things will get better soon, as this has been a major deterrent for our industry and our company also. Consequently, a subdued operating profitability impacted the net profits for the quarter gone by, as depreciation and finance cost remained range-bound. A quick update on the progress of our other efforts. On the hatcheries, I have stated in the regarding the construction of the phase 2 of the hatchery being totally completed. We are awaiting the regulatory approvals and audits for the facility to commence commercial operation. With this, our entire hatchery-related requirements are completed and they are all in source to build better network with the farmers and get into more of buyback arrangements for that. Now coming to the outlook for the industry. With regard to the US market, as mentioned, the food service sector is back on its feet with all the holiday season, with regard to summer holidays which had happened all this for the past 2 months. Good consumption has happened. The demand has been very steady. The prices also have raised and they have been remaining steady even as we speak. And India's market share also had gotten back to its previous stage, and India is now the number one. As shipments are moving, as these container issues get resolved, more and more shipments could happen from India, and thereby even, of course, even our company shipments also would be increasing significantly. And overall, the consumption has picked up and the demand is very steady with regard to the US market. The EU also has been very encouraging. The food service sector has opened up and a lot of inquiries with firmer pricing has been coming from the EU customers. And we are also appreciative of those customers in the EU, within the European Union as well as the US, who have proactively understood the current logistical nightmares and also have agreed upon supporting us with regard to the increase in freight costs. We appreciate that. The EU customers have also increased their inquiries to us and we are able to continue that. We could also notice that with regard to the rise in the business to the EU market in the Q1, and we hope that we'll be maintaining a definitive market share of the EU market. With regard to China, as such, our business to China, which you all know that has been little, nothing significant. China has still continues to have issues. They still have stopped significant number of companies out of India as well as other countries in the world like Ecuador, where they are blocking shipments and several ports are delaying in releasing the containers, and a lot of containers are being tested for traces of COVID-19 on the packaging, etc. So anyway, China as such has been restricting its imports of frozen shrimp from pretty much across the world, all the producing nations, whether it is India, Ecuador or Vietnam. So with that, I now request Mr. Vijay Kumar, our CFO, to take you through the brief highlights of our first quarter of the current fiscal performance. Thank you.
Thank you. Good morning, everyone, and hope all of you are keeping safe. I shall brief you on the financial highlights of the quarter gone by. As mentioned earlier, our product mix has been improving with higher proportion of retail and the value-added products, which have aided the overall realization. For the quarter ended June 31st, 2021, our sale of products grew by a strong 9% year-on-year and 20% quarter-on-quarter to rupees 2169 million, as against rupees 1990 million in Q1 of FY2021 and rupees 1732 million in Q4 FY21. The growth in sale of products was a result of volume growth of 2% year-on-year and 23% quarter-on-quarter to 3262 metric tons in Q1 FY22 and higher average realization of over $9 per kg of shrimp sold. As far as the profitability is concerned, EBITDA margins are impacted considering the challenging environment comprising usual dispatches but higher production, higher export expenses and discontinuation export incentives. The resultant EBITDA for Q1 FY22 came in at rupees 138 million and accounted for 6% EBITDA margin as against rupees 212 million in Q1 FY21 and Q4 FY21. However, as production picked up pace with capacity utilization improving to 58%, depreciation and interest cost remained as a desirable level when compared as a percentage of income. The PAT for Q1 FY22 stood at rupees 33 million versus rupees 85 million in Q1 FY 2021 and rupees 84 million in Q4 FY21. The geographical breakup of sales in Q1FY22 is as follows. 81% came from US, about 16% from EU, while the balance 3% came from China. With that, I can conclude our opening remarks, and now I request the moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Samir Raj from Nippon Asset Management. Please go ahead.
Yeah, good morning and thanks for the opportunity. So Chaudhary, from your opening remarks, what I could conclude is that the first quarter numbers are an aberration sort of. There are one-off factors, and the fundamental outlook for the rest of the quarters is much better than the first quarter, and first quarter is not representative enough for the outlook for the next of the year. Is it correct observation?
That is very much correct, Mr. Samir. You have arrived it correctly. As I had mentioned, the first quarter typically had most of the, as you have already been seeing over the past few quarters, that even though the production has been completed, the shipments couldn't get completed because of the issues in the logistics. So most of the product which was shipped in the first quarter, that has been, in fact, the procurement is being done from the Q4 of last year. And of course, there is no change to what I have mentioned in the previous call too. There were tailwinds on either side while that call was happening, and that will be reflected more into the subsequent quarters. But I will not be able to give you any precise information or any numbers for you to infer. I'm sorry about that. But yeah,
right. And then if one looks at our FY21 performance, that itself was sort of affected by COVID-related factors, kind of. But now with COVID-related factors receding with vaccines and all that, and hoping that third wave won't be as potent as second wave, are we confident that at least we will be able to maintain FY21 numbers, or that also we'll have to wait and see?
No, we should be looking at subject to supply, and yes, hopefully that there is no COVID third wave and markets continue like this overseas, and of course the supply also maintaining its flow. It's as per our expectation, it should be much better as far as the current financial year is concerned in the whole, because ours is not cannot be observed on a quarterly basis as such, because it has no relevance with regard to quarters. Whereas, however, we are just waiting for this issues related to shipping to get resolved, and we have already noticed our Q1 has had a very good productivity, which I have mentioned. It was a very good one, and we look at much better productivity subject to supply at the same time shipments too, because lack of shipments do deter the level of productivity at some point. We cannot keep on continuing to produce when we cannot ship, right? Once our cold storage is get full. That's exactly what has been happening for the past 3 months almost. Yeah.
Right. And as far as high shipping rates are concerned, you already started getting reimbursement from your customers. Are they absorbing some of the increases?
Yes. Some of our customers from non-US markets were the first ones to respond to the issue, and they have actually revised their POs, the purchase orders to us. And our customers in the US too, which is our major market, they're also some of our major customers have been looking at it, and they have also accepted, and they are working on giving us basically reimbursements, even though for some of the shipments which have already left, so that we are going to get it in a different way, get it reimbursed basically.
Right. And then lastly, apart from this shipping related, transport related challenges, are there any other challenges you think industry and truck? Because we also heard in between the raw material prices also shooting up significantly, and that's creating some problems for the farmers. So what's your call on that?
Sir, raw material prices, shrimp prices going up is actually good for the farmers because
No, basically raw material for shrimp prices, that's the shrimp feed prices are going up for farmers, and farmers are not very happy about it.
so, Mr. Samir, as you know, Apex doesn't manufacture feed, but I believe that is more of an answer to be given by the feed manufacturers, not by us.
No, that's fine. I'm just trying to understand is that will it not affect supply of shrimp for us? Because farmers, if they don't get good margin, they may not produce enough, and that in turn like creates some shortages, etc. So is a factor that's worrying you, or you think that's a good one because it causes increase in prices of?
Well, we would look at it this way that prices at the farm gate level have been steadily rising. So any source of increase in cost would also be taken care by that. But it is more also related to the farm level efficiency with regard to the output and productivity at the farm level, which also like similar to Apex having its efficient productivity, normalizing its costs at the production level. Same way, even at the farm level, that it depends on its productivity and their yielding, their output. So that should be taking care of it. So as far as the feed costs are concerned, there are several other costs which have also increased over the past 6 months. COVID, no COVID, that is irrelevant. But right now, as the market prices are increasing, and they are being steady because there's also some bit supply issues right now for the next 1.5 months. That's what we expect because farmers are again going for stocking as we speak right now. They are going for stocking. Some of them have already gone for stocking a month ago. There's the second crop stocking. It's been going on. So they are all enthusiastic with regard to the increase in farm gate prices. Costing going up because of feed or any other input that is based on various other parameters. I'm pretty sure the feed manufacturers are also doing their part in importing their raw materials.
Right.
We have noticed some articles.
Yes. Yeah. Great, sir. Thank you and all the best.
Thank you very much.
Thank you. The next question is from the line of Ashwini Agarwal from Ashmore Investment Management. Please go ahead.
Hello, Mr. Chaudhary. It's a tough quarter, but I just wanted to understand a couple of things. How much is, the delta in other expenses when I compare it to Q1 of last year, which had a similar order of revenue, but even if I take the March quarter and adjust it for the growth in revenue, the delta in cost line is somewhere of the order of 6 to 7 crores. How much of that was on account of shipping? And you mentioned higher export expenses. Is there some other expense outside of shipping that has gone up?
It was significant. Primarily, it is the export expenses, but apart from that, of course, the packaging material costs and the chemicals, which is the additives, those costs also have gone up. But the main component, you have rightly asked, in the current quarter, that was 15.54. So that's 155 million. So about 15.54 crores was the current quarter, export expenses.
Mm-hmm. And how much of that is shipping, sir, out of that 15.5 crores?
That entire 15.5 crores is shipment related, it is all export expenses.
And how much of a shipment goes as CIF versus FOB? Is it all CIF?
Everything is cost and freight only. We don't do any FOB as on date. However, thanks for putting forth that question. The trade as well as our company is contemplating to look at shipping on a FOB basis. As such, we have been discussing with few of our customers whether or not that happens. But as I have informed to the previous caller that we are looking at, already we are getting support from the customers with regard to reimbursement of the freight increase from some of the customers. But if things continue like this with regard to ocean freight being hiked up in a similar manner, we would be left with no choice but to look at shipments to be done on FOB basis only. So that is being discussed. That is being discussed even among the trade members across the country.
And the long-term agreements that you had entered into, which you had referred to in your previous call, and you had said that new shipping rates will be effective pretty much the start of the first quarter. Are these kind of medium-term agreements? What is the validity? 6 months, 12 months, or how are these?
Typically, the freight contracts are service contracts are taken on annual basis, and it's for the that's you are I believe you are referring to the ocean freight contracts.
That's right.
Correct.
That's it.
Yeah, that is on annual basis, and this year it was almost from April and May onwards it started. By then, already the freight rates have increased. Now, even though the service contracts are entered on an annual basis, considering the present situation where the highest bidder gets a container or the highest bidder gets a vessel space, they have been even charging, which I have mentioned in the opening remarks. They have been charging premium. They have been demanding premium rates for getting our containers and getting vessel space. So, to be precise, from their end, I don't believe they are giving any significance to their own service contract, which they have issued to us and we have signed on our behalf, so on our part. So, unfortunately, I mean, this is the market scenario right now, and this is industry-wide. It has nothing to do with food industry or shrimp or Vitex alone.
And from what I've heard, rates have only firmed up over the last 3 to 4 months. There has been no respite at all. So this problem is only going to get worse in the current quarter.
Well, the rates have gone up. At the same time, our sales prices also have gone up. And at the same time, there are customers who are willing to look at, and some of them have already given us reimbursement towards the increase in freight costs, and others are working out towards that. So, in one way, end of the day, the increase in freight cost is going to, I wouldn't say entirely, but even partially, it is being more dealt by the consignees as such, because there was a limit to what we could have dealt with this. Now, regarding the point of how long it is going to be there, well, there are multiple reasons for these tightness in the logistics issues. One of the main issue is blockade at various ports across the globe, whether it is in USA. All the major ports in USA have vessels standing by the sea, which is the situation has been there for the past 2 to 3 months, almost 4-5 months actually. It's the lineup of vessels. So the turnaround of containers from the destinations is also getting slowed. Apart from that, one of our major shipping line whom we have a rate contract with also has a major contract of shipping out goods, relevant, irrelevant. I'm not supposed to comment, but shipping out goods from Afghanistan as per a government contract issued by the major country. So all these things, because when containers are blocked by a governmental agency for any specific need, those containers, even though they are not reefer containers, they are going to just block the vessel space, which naturally make the vessels unavailable. That's why usual 10 to 12 callings of vessels calling Visakhapatnam port has also drastically been reduced to 4 to 5. That do not guarantee that sometimes they are cancelling. These are all multiple issues. But as things get better, as things open up in the US, as these issues related to employees, workers, longshoremen working at the port terminals come back to work, things could get better. Hopefully, the turnaround of containers and turnaround of vessels happen much sooner, and this issues with regard to logistics and shipping would come to an end. But well, if you specifically ask us today, will it happen by the end of August or by the end of September or by the end of November? We don't have an answer because we thought it would get better in the present quarter. but that's not been happening. But we are awaiting. Hopefully by September end, we are looking for some improvement to be happening even in the ports of US, because we have read several articles from there that steps are being taken to improve the situation there. So we're just hoping that things get better in the shortest time possible, so that we can also plan our shipments, production. Everybody is suffering, not just us, but our customers, because they don't get our product. Our end customers, because they are not able to place the product on their shelves. So it's not just not shrimp. We have seen it across all products, furniture, electronic goods, everywhere. Anyway, that is not relevant to our company, but that's been there everywhere. All the imported products by these countries, whether it is US or European Union. Even Europe, we have issues with related to containers. So we are working on them. We are paying higher rates, and also we are getting the support from the customers. So we hope it will get resolved soon. As these things get resolved, the global circumstances, which are for sure we will not be able to comment or give a confirmed date or so and so. It is hopefully we expect, at least we hope things are going to get better by September, and a lot better by the end of the current calendar year, that is December. But we don't know how it will be. We are just waiting. The sooner they get better, the much better it is for companies like ours to do better, to plan better, to be precise.
Sir, two more things. One was on relating to the pesticide residue issue with the US FDA. Are bulk of your shipments still having to wait for sort of a lab test report before they are accepted by the customer? Has there been any change in that process? And second is that on MEIS, the Commerce Minister said a couple of days ago that RODTEP should be back. Will RODTEP help you, because bulk of your costs probably don't have a lot of taxes in it?
Okay, first thing, I'm sorry. First, I got confused between.
The first one related to the pesticide residue in US FDA test.
Yeah, sorry, the antibiotic. It's not pesticides. Yeah, the antibiotic related issues. We don't have any problems since March of 2021. We don't have any more shipments being kept on hold. In fact, most of the shipments which have been going through have had no issues. In fact, so we don't foresee any more problems too with regard to the antibiotic testing, holding testing and release as such. We don't really foresee any problem, because all the things are in order. That is regarding the antibiotic hold and release at US. Then the other point is regarding MEIS and the new scheme of RODTEP. That was told that it will be announced on Saturday. If I'm correct, it was told on Thursday or Friday that it will be announced on Saturday. But we were eagerly looking all through the weekend, but we didn't get any news. So hopefully, I don't know, maybe today or as we speak, or I don't know, hopefully this week we should be getting some information. It will be announced. We'll be knowing at the same time as you know. Now, with regard to the component of taxes, duties, this is not only this is not pertaining to only to the inputs at the export level or at the processing level. It also has related to, at the raw material level, even at the farm, basically even from the origin. So it is even the diesel component and all the inputs, wherever the duties and taxes are levied, indirect taxes, they are all factored in. So it's just not related to export only. So the calculations, of course, they have been done by the respective people in the Commerce Ministry, and it's all based on all the inputs which are there with regard to exporting shrimp. So it's not just processors alone. So it's just not the effect of indirect taxes duties and taxes paid by the exporters alone. That's what I'm trying to say. So it's included from the raw material stage. So if it is aquaculture, even the duties levied on anything on the feed and subsequently even on the diesel inputs, for example. So the inputs are not just at the processing and export level. So we will wait. Hopefully we will hear today or tomorrow. Hopefully this week we should get, because they said they would inform us last week and that it did not happen. So as we will get to hear, we will understand. We will know that better, and we'll be able to make a comment at that point of time.
Okay. All right. Thank you, sir. All the best.
Thank you. Thank you very much.
Thank you. The next question is from the line of Nitesh Jain from Birla Mutual Fund. Please go ahead.
Yeah, good morning, Mr. Chaudhary.
Good morning.
Yeah. So basically, a couple of things. So in the last quarterly call, you had mentioned that there is some tailwind for the Apex as well as the other shrimp exporters, in the sense the way industry was shaping up in last 6 months. So we had overproduction of shrimp and oversupply in domestic market. At the same time, we had higher demand from US market and the food service industry, leading to higher shrimp prices. This was, your comment in last quarterly call as well. Now, I want to know,
yes.
I want to know that while we totally understand the shipping and the container freight cost thing, why the benefit of this lower raw material prices did not get reflected in your margin performance in Q1? This is my question number one.
Okay. Okay. You want to go ahead, or shall I answer that? I think you might have missed. I have informed about that part in the opening remarks, but anyway.
Just one thing before you answer. I just want to substantiate my question with some figures also. For example, in March quarter, in Q4 of FY21, your gross margin, the raw material cost, which is plain raw material divided by sales, was around 69%. And while in Q1, it was 66%. And in Q1, the latest quarter, it has become 69%. So the point is, it's not just only the freight cost and the container thing. It is basically Apex as a company has taken hit on the raw material side also. It is quite, contrary to what is happening in the industry and the domestic shrimp industry. This is the entire set of questions. Please explain.
Yeah, sure. We are not saying that what we said in the con call of March quarter is wrong, or it is very much true, and we stand by that. We have had opportunities on both ends, and we have been having until recently. Now, of course, the supply shortages that's a different point. But with regard to the margin, dent in the margins, I have clearly mentioned, one, of course, leave aside the export expenses. Even with regard to the raw material, currently our production and our shipments, there is a lag. So when the shipments are not, basically just because the shipments are not happening, we cannot stop our production. So most of the shipments, in fact, I don't have an exact percentage of the raw material which was used for the shipments of Q1. In fact, part of the material which was used for Q1, which I mentioned, as mentioned in the opening remarks too, is that it was from the Q4, that is basically February, March, procured raw material was also utilized quite significantly in the Q1. When we have discussed for the March quarterly con call, I have very clearly specified that yes, we have advantages on both sides as we are having. Yes, there is a drop in pricing on one end, that is on the farm gate, and there is also the demand picking up. It's been on the other side, so it was coming up together. So that was very true, and it was there. It was that will be reflective more when those shipments actually go out. So all the low price, in fact, a significant amount of the low price product which was purchased during the Q1, if it is sitting in the cold storage, we would not be able to reflect that. That's what I think. I don't know if by chance, I thought I mentioned that in remarks.
So essentially you are saying it's the timing difference. Those benefits should get reflected in, say, September quarter, right, when the shipments are made.
Bound to. They are. Yes. Okay. That is correct.
Sure. And secondly, Mr. Chaudhary, I want to ask you one holistic question on the profitability of Apex and entire industry. I mean, I really fail to understand that a company like yours, with such a modern, state-of-the-art, new plant, and thousands of village workers coming in your factory and working hard, and so much of economic effort going in and out, and in a peak quarter, you still make like 4-5 crore of profit. I think I totally fail to understand, like, with the competitiveness that India offers to the global export industry in terms of labor cost, where is the problem? I mean, for a 5 crore profit in a peak quarter, it's totally unthinkable. You think that all these Ecuadorian guys with their cost structure should be loss making then? If Apex is making 5 crore profit in a quarter?
Well, Mr. Nitesh, you are the only one who just now heard me saying what we had related to our company. Yes, this was the issue. So I don't know how other companies have been operating. They have their pros and cons. Now, if you are trying to take the profitability with related to employees, workers working from rural areas, this is basically, as I said, I think in the beginning of the call itself, thanks to one of the previous callers, he pretty much understood what it is. It is like a one-off situation for us. So I don't know how other companies are faring well, or we don't.
Okay, no problem. So, sorry, let me ask you this other way. According to you, I mean, okay, let it be a one-off quarter, but then, sir, what should be your normalized operating margin that you should target for your business with this kind of, modern setup and low cost of production? But in a quarter, I mean, on a longer horizon or on a yearly basis, what operating margin you should target? You have in your mind to target for your company? Is it 10%, 12%?
We have been telling over the past several calls that we look at around 11 to 12%, and as we increase our value-added products, we would be looking at much higher. But of course, meanwhile, there was a withdrawal of MEIS, which was also a support. But now, whether it will be replaced with the new scheme or not, that is irrelevant. We have to work on ourselves. So we don't know when that scheme will come, whether it will be available immediately or prospectively or retrospectively. But still, we have to work on ourselves. So we are working with regard to our products, and also, of course, that would hopefully the logistics issues come to an end, and we can also do our volumes. Our volumes are not shipped until we ship it. I mean, it's not done until we ship it. As we have been saying again and again, I'm sorry, just because we produce it, the volume is not done. It has to be shipped. So then only we also get to realize everything. So yeah, that is the standard 11 to 12%. But we just look for it, as things get better. I cannot really make a comment based on because we have, thanks to our customers also, as I mentioned to the previous callers, we are also getting supported with regard to some of our cost increases. With the example, I just told to the previous two callers that we are also increasing the freights being supported by our customers. So we look forward to that.
No, fine, sir. Thank you very much, and I really hope, a setup like Apex with a modern factory and management team like yours, it actually never deserve 4-5% type of margin, even without that government thing. So looking forward,
exactly. Without the government support, we are looking at it, and we would want, if government support comes, it should be more. It should be higher than what I mentioned. So that's what we are looking for, and we did not expect this. Last year it was COVID. This year there's no COVID for us as far as production is concerned. But a globally challenged issue of logistics is something which has been going on for the past 6-7 months almost. So even though we produced one of our highest production, we couldn't ship it out. So we are not able to realize our margins also because of the blockage there. And okay.
Fair enough. Really appreciate it. Thank you very much, and all the best.
Thank you.
Yes.
Thank you. The next question is from the line of Nitin Gosar from Invesco. Please go ahead.
Hello, sir. Couple of questions. On the system level, inventory side in US and Europe, how should we think about it post the recovery in the market opening up in US and Europe? Have the local level shrimp-related inventory come off, or they are still elevated there in those regional countries?
Well, Mr. Nitin, as far as the inventory levels are concerned in the US, it is not at all meeting the requirements of the customers as far as we have been informed a little while ago. Few weeks ago. So the products, the containers are basically the product as and when it reaches the destination, it is just being sucked up. It's being absorbed. So we do not. That's the scenario as of now. Again, that has a lot to do with summer holidays and opening up of restaurants, everybody coming out and dining. So several factors are there. So, but definitely so far that is how it has been. So, of course, this has also got to do with because of the shipments getting delayed at origins. Naturally, the product not reaching destinations in time, and the demand, the supply, the product, basically the demand's not being met. So that answers everything. So,
got it. So inventory levels at the customer end or the distributor level have depleted, and now they are almost at par with whatever demand is, or probably demand is outstripping the supply, right?
Actually, the demand is outstripping the supply at the destination at this point. Now, as I said, this has got to do with many factors of opening up, summer holidays, everything. So when things will be slowly changing, maybe they may be stabilizing out there. Right now, the demand is outstripping the supply. What is reaching the destination? As far as what could reach the destination. Yeah.
Got it. And in the ideal scenario, distributor or customer will be holding inventory of 15 days or a month? In an ideal scenario, what kind of inventory they hold up?
Typically, I believe they will be holding around 1 month, 1 to 2 months, depending on their the end customers' needs, depending on the end customer. They are the hold 1 projects. Depends on whether it is a food service customer or retail. Sometimes they make them hold maybe even 2 to 3 months. Some products which maybe may not be. But as far as we know in the recent past, as I had mentioned, the demand out there has basically more than the supply what they could get. So as and when the product is reaching the destination, it's just being absorbed.
Got it. So second question is pertaining to the India level sales. I recollect in last quarter you had highlighted that whatever India is losing on market share is more momentary or temporary, and it will bounce back sharply. And possibly the data thereafterwards have been completely indicating that India is now regaining a lot of volumes, or at least have come at par. Incrementally from here, if I were to look at the peer sets like Vietnam and Ecuador, what would be the thought process with regard to sourcing from those nations? The demand that they have seen over last 2-3 years, would they still continue to stay elevated, or as India picks up, the other two nations will slightly moderate off? How should we keep in mind the combination between these three countries, India, Vietnam, and Ecuador?
India, Vietnam, and Ecuador have their own pros and cons. Disease plays a role in 2 of those countries like India and Vietnam. In the case of Ecuador, it is more of an extensive farming, and they have been more dependent on Chinese market mostly. But over the last few months, they have made some diversification attempts into the U.S. market. They have been supplying there too. Currently, we would just say that it's a competition which is there. It will continue to be there. We have our own, as I said, individual each country's individual pros and cons. We just need to look at mitigating the troubles with regard to the disadvantages in our country with regard to disease, for example, and cost efficiency, better outputs, farm level output, better yielding, So that thereby we remain more competitive. Definitely, compared to those countries, our cost of production at manpower level, we are competitive with regard to manpower. Now, other factors are there which are affecting our costing. So those factors, I'm talking about the farm level. I believe this is all related to the farm level. So when those factors get handled at the farm levels, I would believe in India it is more to do with farm level output, yielding, not output, but not as a whole, but a yielding part with regard to the survivability and the stocking densities. Over the past few years, Andhra has been aggressively doing high stocking densities. Of course, the farmers also are evaluating their strategy. I don't know. I cannot comment much on that. But in the interest of the sustainable growth and sustenance of the farming activity, I personally believe they should be relooking at their stocking densities and having a better farm management in the current risky atmosphere with regard to disease and other fluctuations, etc.
Got it. And last question. One is the 25% of production that couldn't be shipped this time. Does this get dispatched and clubbed in the following quarter, or it's a opportunity which got missed because we couldn't ship it on time, so the customer would have procured it from somewhere else? How should we think about it?
Oh, no. All the shrimp which couldn't be shipped have the customer's names written on them. So they have to go. The customers require them. So there's nothing like it's getting stuck. So the customers need these products, and we also are waiting because we are also just stretching our inventory days and even our working capital cycle days. Everything is getting stretched in this crisis, logistical crisis. So they are bound. They are going. They are all meant for specific customers.
Okay, got it. And last, value-added tonnage this quarter, if you can call it out, sir.
Sorry,
what would be the share of value-added?
That was 21%. The ready-to-eat was 21%.
Yeah, ready-to-eat. Yeah,
that was 21%.
Yeah, got it. Yeah. Thank you, and all the best.
Thank you.
Thank you. Before we take the next question, in order that the management is able to address questions from all participants in the conference, we request participants to please limit their questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Dipesh from Equirus. Please go ahead.
Yeah, hi, Chaudhary. Thank you for taking my question. Sir, on RODTP, the media is saying it will get announced today, so let's hope. But just wanted to understand, when it gets announced, you will book the entire amount since January in the coming quarter, right? And secondly, the MEIS booked in the first half of FY21. The government has still not made the payments, as you understand. So are we looking at any provisions for them in the coming quarter?
At this point, we have not yet decided with regard to the board has not yet decided with regard to the provision of the MEIS which was not received of the last year. That is with regard to the MEIS. It is receivable, and most likely we may be deciding in the next, in this present quarter or the subsequent. Actually, we will be looking at it this year, depending on if the government acts on it or not. And with regard to the new scheme, it will be dependent on the scheme. We do not believe that we should be able to yet come to a conclusion of, first of all, what will be the effective date, whether it will be retrospective or it will only be prospective only. We don't know yet, right? I don't know. If you know anything more, please do enlighten us, because I personally, we don't know.
So, like RODTP has been is applicable since January 1st, right? That was the understanding, and whenever the dates get announced, they will be retrospectively. Is that not correct understanding?
Mr. Dipesh, the scheme was announced to be effective from January 1st, as originally proposed and announced about the proposal. The final scheme announcement has to be noticed and studied and understood, basically, to know from when they will affect. And of course, once they announce, we will accordingly bring it into the accounts accordingly. So it will, of course, whatever comes in, it will be only bringing into the books will be on, even though if it is for a retrospective, even though it's a retrospective benefit, it will only be looked at taking into the account prospectively, right? So it will be done in the current quarter once they announce, and we'll see what it is. We'll see the scheme.
Got it. And secondly, sir, the overall Indian shrimp exports, if I see to US, right, they have gone quite strongly, like 30% plus was the growth. But if I look at your numbers or the other listed companies' numbers, they were very flattish volume growth. So just wanted to understand who is exporting so much from India and how they are able to do it when there's so much shipping issues.
Everybody is exporting out of India to the US. I would say everybody, because once the company started having issues with China with regard to their blockades at the ports, testing, COVID issues, whatever COVID traces on packaging, etc. Everybody's focus is, of course, changed towards the Western Hemisphere. That's what I would say. So,
my question basically was that, sorry.
So what I was saying is it's being done across the country. So it's just not like, and if you ask, well, how is it possible that it is still been growing, whereas you and few others are remaining flattish? We are on the East Coast, right? So we are dependent primarily on the port of Visakhapatnam, or we would go up till Chennai. Well, of late, we have also been venturing into Navasheva. But that is all there are limitations to what we can do sitting from the East Coast. Now, whereas there are companies on the West Coast who continue to get their equipment because they are on the West Coast. So it doesn't mean that if the vessels or there are issues on the East Coast to that port, it would be the same on the West Coast. So it has been across the country. The shipments have been going on from across the country. Volume definitely has been going from all the ports. Unlike the past, Visakhapatnam was the number one reefer container exporting port, but I don't know how the current situation is right now, because pretty much we have vessel cancellation almost every week, almost. So that is continuing to happen. So I don't know, but I know that overall the whole country, the exports have been going to US because of the issues in China. A lot of focus, diversification to the US market has also been happening, even from those companies who are not traditionally exporting to US, and they are not just located on the East Coast or Visakhapatnam or Chennai or Kolkata. So they are also, even those companies which are there on the West Coast also have been started doing more to the US. So overall, yes, exports to US have been increased. And by the way, your question is based on the import statistics.
Right. So that has a lag, yes.
The import between the import statistics and the exports, there's always a 45 to 50 day currently. Earlier it was only 30 to 35 days lag, but now it is 45 to 55 days lag. So basically this all reflects to the Q1 current fiscal year. Q1 imports in the US is more to be related to the exports of Q4FY21, and also some part of it in April. That's what it is. I don't know if it is May. Trust me, there are a significant part of March exports which have reached in May into the United States. There's always a lag. That lag has increased in the current logistical crisis from 30 to 35 days. It's went up to 45 to 50. It's some of our main ports itself, it's taking 45 to 50 days like that. Yeah.
Okay, so in a way you're saying that the data starts showing some lower growth in the coming months. That's what you are basically trying to say.
Then it depends on, again, as I said, please understand, earlier the concentration to the US market was primarily on the East Coast, because that is where most of the aquaculture was. But now, this year, with the issues on the Chinese front, a lot of companies, even on the West Coast, are focused on the US business. I mean, of course, bringing in raw materials from other states. Yeah.
Got it, sir. So lastly, if you can just help me with the hatchery sales and the export incentives booked in the quarter, please.
Yeah. Hello.
Yes, sir.
Hatchery sales are around 2 crores 98 lakh for this quarter. Okay. And export bills we have booked only duty drawback only, not MES.
Yes.
Duty drawback around 6 crores this year. And
Okay, how much?
export benefits,
Not a year, this quarter, this specific quarter.
This quarter.
So sorry, how much? Can you repeat the number?
Net.
Net export benefits are 2 crores 50 lakhs.
Yeah, that is 2 crores 50 lakhs is the export benefits net of the Q1FY22.
Yes.
Got it. Got it. Thank you, sir. Thank you and all the best.
Thank you. The next question is from Nitin Awasthi from InCred CIMB. Please go ahead.
Hello, sir. I had a question on your balance sheet front. Last time around, we had seen the trade receivables figure go to a very abnormal level, and I believe locking a lot of capital. So just wanted to understand where does that figure stand as of today, and how much of that money has been realized?
Sorry, can you repeat your question, please? You said balance sheet numbers.
Hello, sir. So last time around, we had seen the trade. We had seen the trade receivables figures rise a lot, and block a lot of capital, which was an abnormal rise. So I just wanted to understand how much of this money has been realized and what is the figure currently?
Sales receivables? Sorry, you said which one?
Sorry, trade receivables.
Trade receivables. Trade receivables, yeah. చెప్తారా? The trade receivable, 1 minute. We'll just get back to you on that, please.
Okay, so I just want to understand the momentum of basically the deal had been stretched. So something like 80 crores in March 20 and moved up to 155 crores in March 21. So this time around, a lot of sales again getting stuck, or you're being able to realize the money in the shorter period duration?
No. Of course, I don't have the number with me offhand, but with regard to receivables, now that will be, there is no money getting stuck. It is just that, as I had mentioned to the previous caller, that the realizations are done basically upon clearance at the destination. So, on an average, when the earlier clearances used to happen last year and the year prior to that, in 25 to 30 days, 35 days. Now it has gone up to 45, 50, 55 days. Some of the inland destinations, it's gone to 60 days. So not the main ports, but inland destinations. So naturally, accordingly, the data cycle is increasing accordingly because of the days, because of the time taking because of this sailing issues and shipment. The transit time which is taking. So that is the main reason. There is no issues with regard to any of the receivables as such, and they are all being taken care. It is 132 crores export the receivables. Export debtors.
Okay, as for this quarter, and how much of the last time's figure 155 was realized?
It is 132 crores. Thank you. 133. Yeah. So, hello?
Yes, sir. Hello?
Yeah. Just a minute, we'll come back to you.
Okay, so I'll move on to my next question. The next question was regarding the supply of raw material for your company. what the channel checks are suggesting is this time around diseases are back. So just want to check with you, is it really so? Are diseases back specifically in Andhra, and has the stocking densities reduced because of the disease risk, because of lower farm gate prices that the farmer is realizing relatively?
Can you repeat your question, please? I'm sorry.
So, channel checks are suggesting that this time the disease risk has gone up in Andhra Pradesh, because of which the farmer is reducing his stocking densities. So, how far is that statement true?
Sorry, which rate you said? The disease? I'm sorry.
The stocking densities basically by the farmers have been lowered.
Yeah, that is a farmer's strategic call. So this is something they have been deciding based on the scenario. In the past, they could even harvest smaller sizes because there was a market to support the smaller sizes in volume. But now that market is affected and it's kind of having a lot of obstacles. So there's also a change in strategy. Again, we do not know how many of these farmers would really relook at their methodology of stocking density or their strategy regarding stocking density right away in this crop, which they are stocking, or how much they would be doing it by the end of this year, basically for 2022 crop. We are not able to comment at this point, but we know that there are considerable amount of farmers who have been looking at it, and they have, in fact, some of them did reduce their stocking density to a certain extent in order to look at growing more of medium and larger sizes.
Noted, sir. So let me connect with you post the call for the trade receivables figures and all, and that's all from my side as of now.
Okay, thank you.
Thank you. The next question is from the line of Nishit Jain from Prasad Investments. Please go ahead.
Good morning, Mr. Chaudhary. As we see, there is an increase in the finished good inventories close to 52 crores. And as informed, this is due to basically the logistic issues. The production wasn't converted into shipments as mentioned by you. So as 52 crores is almost 25% of company's quarterly revenue. So if you can share details in terms of volumes for this 52 crores to understand the price realization at which the inventory is booked, as ultimately this may have a positive effect in the second quarter profits.
The inventory on an average, basically, I will let you know the average purchase price which was there for the quarter was 289 rupees.
289 rupees.
Yes.
Okay, and the inventory in volumes, can you mention? Was it 900 metric tons, 1,000 metric tons, or plus minus?
I don't have 1 minute, please. Just a minute. I think he'll just get back to you on that, please.
Yeah, sure. So this may have an effect on the second quarter, right? Basically, the inventories are booked at the cost price.
As these inventories get, they get translated to sales. Naturally, the inventories are bound to, because inventories are not considered with regard to selling expenses or
right
or anything. So most of it is taken, and then so it's only on cost basis.
Okay.
But
okay, so I'll wait for the volume figures.
Yeah, sure.
Thank you. That's it.
Thank you. The next question is from the line of Saurabh Sharma, who's an individual investor. Please go ahead.
Hello, good morning, sir. Am I audible?
Yeah, please, Mr. Saurabh.
Yes, sir. My question was regarding the competitive intensity of the industry, shrimp exports primarily, not the feed and the inputs and all of that, just the shrimp export industry. So you mentioned about the western coast-based exporters also coming into the market because of the container availability just a while ago in response to a previous question. So my understanding is most of the exports are made from the East Coast. Would you have a number in terms of proportion of overall exports of India that come from the East Coast versus the West Coast?
No, sorry, we don't have that number, but the point is seafood exports happen across the country. Please, it happens even from the East Coast as well as from the West Coast. It is just that the East Coast, it is dominated by aquaculture, and the West Coast, it is mostly capture fisheries, which means...
Right. So I meant only aquaculture primarily, the field that the company is operating in, shrimp exports primarily. Would it not be fair to assume that most of the exports are done from the East Coast, even in the current situation? Hello? Hello? Hello?
Mr. Chaudhary, Mr. Vijay Kumar?
I'm sorry? Hello?
We seem to have lost the line for the management. Please stay connected while I reconnect the management line.
All right.
We have Mr. Chaudhary reconnected. Over to you, sir.
Yeah, sorry. Yeah, I think I was just saying that the exports also depend on the various ports. So even hello?
Yes, sir. I'm here.
Yeah, so I was saying it also depends on the various ports from where different companies are exporting. So from the ports where we mainly operate from, we continue to have these logistical challenges. So there are, of course, quite a significant exports happening both on the east as well as west coast of India. So, but most of it has been everybody is looking towards USA of late because the Chinese market issues. And as Chinese market opens up, I'm pretty sure again things will be changing. So.
Right. Also, sir, is there a target percentage we have that we target in terms of a proportion of the overall exports happening out of India? Do we track that number, the proportion of the overall exports that we want to control or that we want to, be exporting from the company? Is there a target that we have? Or, in terms of, benchmarking us against competition, whether we are gaining market share from the overall shrimp exports from India?
Yeah.
Because we have expanded capacity and we are at 30,000 metric ton right now. I'm not really sorry to interrupt, but since we have expanded capacity, it must have been done in expectation of at least gaining market share, right?
Sorry, if you actually get the statistics of the overall Indian exports with regard to shrimp, I'm sorry, but I don't have it readily available with me on hand.
But close to 1.6 lakh metric ton per year.
Available from marine products. It will be available from marine products export.
Yes, it's close to 1.6 lakh metric tons, sir.
No, sorry. That is over the shrimp production itself is 6 to 7 lakh metric tons per annum.
Go to USA.
So no. Okay, so the US now 30,000 metric tons for us is our 29,000 odd. Yeah, so 30,000 approximately is our processing capacity. Doesn't mean that we would be placing ourselves as it's not like we are looking at utilizing the entire capacity this year, which we have mentioned in our previous calls too. So if you look at this year, we are looking at a minimum of 50% of the current capacity. And we are on that path so far. We look forward to do better than that. We are currently on that path. For the first quarter, we did utilize 58% of our total capacity. So we are looking at using better utilization going forward. Now, with regard to market share, we have our definitive customers. We have our definitive products which we deal with them. So as we grow more and more business in that with those customers and those products, we will continue to grow further.
Mm-hmm. The reason I ask about market share, sir, is because in terms of the proportion of exports, shrimp exports from India versus the overall exports versus the overall imports into US, India seems to have reached a sort of a saturation point, which is 30 to 40% of overall imports, shrimp imports into US are being made from India. And so what I sense is that the incremental volumes for any player really is going to come out of winning in this competitive fragmented sort of industry. So I just wanted to get an understanding of us having of course the overall size of the market might increase, but but market share gains can also be made. So is that at least management is sort of working actively towards gaining market share?
We are working on it. We have added newer customers too. In fact, we added first-time customers who never dealt with shrimp in the past 2 years, and we continue to deal with them. And we are growing business on such kind of channels, as I had mentioned also on newer products. So we'll continue to work in that manner so that we increase and improvise our market share overall.
Right. And so one last question, if you may allow me.
Yes, please.
Yes, sir. The question is about the price negotiations that happen with our customers as well as with the farmers. So I wanted to understand the dynamics of these price relationships between the company and the farmers and the company and the customers. How are the price? How are these prices determined? Are they on a very short-term consignment to consignment basis, or are they like the shipping rates that you mentioned is annual, or is it somewhere in between?
It is basically it is different with different customers. So
all right.
Where it is medium term or long term, the pricing is different, and so it's not like a standard pattern of pricing with regard to customers. With regard to farmers, it's all market driven, and of course we also with regard by support of our seed supply, we also look at buyback arrangements with them. So it's a different game here with regard to suppliers and farmers, and it's different out there with the customers. It's not the same with all the customers. Same way with farmers also, with whom we supply buyback. We supply seed and we buy back the product produced from them. It's different, worked out differently with them. So it's not like a standard basis as such. So it is dependent on how those individual relationships have evolved over the period of years.
Understood, sir. All right. Thanks so much, and all the best for the time to come. I will email if there are any more questions.
Thank you.
Thank you.
Due to time constraints, we'll be able to take the last question. We take the last question from the line of Chirag Siroya, who's a shareholder. Please go ahead.
Hello. Mr. Chaudhary, I have a question with reference to that currently the margin of the FX is very low as compared to the industry. So I understand that, as you mentioned, that in the current quarter, due to transportation cost and all, shipping cost and all, because of that reason, the margin are getting shrink. But I want to know whether FX has made any kind of provision during March quarter, in March 21, on the inventory side, because of considering that in subsequent period after March 21, there is a reduction in the prices of raw material plus increasing in the shipping cost and all. So is there any whether the company has made any provision in March 21 for on finished goods and raw materials?
The question is with regard to raw material purchases which happened in the Q1, as I have mentioned in the opening remarks also. Most of the product was sitting in the cold storage and it only had been shipping out in the Q2.
Yes.
And also with regard to the sales which happened in Q1, it had quite a reasonable part of the product produced in the Q4 also. So, which was of course at a higher cost. So please understand that the lower priced raw material purchased in Q1 has not really reflected in the sales of Q1 FY22. So yes, so we are looking for shipments to happen. They're happening. We hope they happen better as we have happen. They happen in this quarter. We will, we look forward for a better quarter as the shipments take place. We just hope that shipments get done, and so that we will be able to realize all that margin which is locked in that lower priced raw material product.
No. So my question was that since the prices of the cost of material that was there in Q4 was on a higher side, and subsequently the shipping costs are also increasing, which the inventory of Q4 was sold in Q1 of the current fiscal, correct? So I was asking whether there was any provision made in Q4 March 21, considering that subsequently cost of the products which I'm going to sell is also getting increasing, and I'm not getting the margin what I was expected in normal course of business. So I need to make the provision as per the accounting standard and now. So whether the company has taken any kind of provision of on inventory during March 21, because currently it seems that the higher cost production was sold in the current quarter, and further the shipping cost has also increased. So because of that reason, the entire dent is coming in the current quarter. So that for that reason only I'm asking that whether the company has made any provision in Q4 for finished goods which was lying in the inventory or in the stock which was not sold, which was sold in the current quarter.
No. There is no such provision made. So I don't think. So as I was trying to say, it is the shipments which did not happen. So it is not that we envisage that the Q1 we will continue to struggle with regard to our shipments. So please understand. So we did not make any specific provisions with regard to Q4 with regard to the inventories, whatever are there as on Q4. Yes, they also got shipped out subsequently in Q1. And most of the product which got produced in Q1, of course, is being shipped out as we speak also. So there was no specific provision. I'm not able to get that, but we did not make any specific provision with regard to that. Whatever inventories were there were shipped out subsequently. So it is because of the lack of shipments. So we could not ship out. So it was the export sales of 200 odd crores should have been much higher. That did not happen. So this was not foreseen that the shipments would not happen in the months of May and June in March. That was not foreseen. So I hope you understood what I'm trying to say. So
yes, thank you. And the other thing is that as you mentioned rightly that the MES license that government has discontinued. So in this regard, whatever is a receivable in the books of Apex. So currently, I want to know as you mentioned earlier that currently the company has not made any provision on that receivable part. So I would like to know the quantum of that MES license which is recorded as a receivable in Apex book.
You mean the MES which was receivable for the last year? For the
Yeah. For last year. So as on
for the last years up till August. So that is not it.
Hello.
Hello. Yes.
Is it audible? Hello.
Hello.
Yeah, we have 22 crores as outstanding.
Sorry.
Than last year. 22 crores.
22 crores. Okay.
MEA is last year only. Last year the receivable only last year.
Okay.
Yes,
And
sir,
what?
only last year.
Okay. And further, if I see there is an increase, the variance in tax expense, delta variance. If you see the tax expenses are much more on a wider side. So could you explain the reason for this variance? So in March 21, around 26-27% was the tax expense, and currently it is around 30%. So what was the reason for this increase?
Tax.
March 21, entire year tax expense was around 27%, and currently it is 27% of PBT, and currently it is 30%. So I would like to know the reason for this. Why such a wide variance is coming in tax expenses?
Just a moment. Can you repeat your question? Hello.
Hello.
I guess we can take it offline if you don't mind. Can you take it offline if you don't mind?
Yeah. No issue. Yeah, we can. And one last thing which I would like to know that whether the company has any policy to you can say to minimize the losses because of this the price fluctuation of inventory and all. Whether the company has adopted any kind of hedging activity?
The company did not have any losses due to the currency fluctuation, number one. Regarding price fluctuation, we don't specifically, the market moves in tandem, so there's no losses as such with regard to any price variations, because when the prices move high overseas, the prices also move high at the domestic side, and when they fall down, it in tandem it also does on the side, so at the production side, at the farm price side. So there's no specific losses as such. As I've been saying again and again, we just could not realize our margins which were stuck in the inventory, and but for sure, I guess if regarding the question which you have asked just now about also regarding the tax point, we can take it offline if you don't mind, as with regard to the time constraints too, with regard to the time constraint we have today. So if you don't mind, we'll take it offline. Is that okay? And there was no specific losses as such, I can understand, because of any fluctuations. So we adopt the prices as it is, as they come in, and they move in tandem. So it's not that we will be bearing any extra loading, which whether we get it in the form of support from our customers or the raw material prices are accordingly corrected. So that those corrections are bound to be there. So there wouldn't be any specific losses as such. Okay.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. Subramania Chaudhary for closing comments.
Yeah, thank you, Mr. Laya. Thank you, everybody, for joining us on this con call of Q1FY22, and we hope that you and your families continue to keep safe. Great. Thank you. Have a nice day. Bye-bye.
Thank you very much. On behalf of Apex Frozen Foods Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.